Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about income and down payment. So today we are going to look at income and down payment. So we are doing series of buying a first home and we already done one before. If you didn't check that one, check it out and how to build your credit score. So today we are going to check on income and down payment, and we are going to calculate how you calculate your we are going to look at how you calculate your down payment. So your down payment, you calculate it to that amount that you can be able to pay every month. So let's go ahead and check. So how much income do you need? And if so, like I said before, we are going to do calculate how to calculate down payment and also how much income do you need to qualify to buy your first home. So the example that I'm going to give is my own example, and then also what happened if you're buying beyond that amount that I was qualified for. So let's see. Let's see now. So if you're new to this channel, please subscribe for more videos and I will appreciate your business. So now let's check. So net income. So I advise my broker to use my net income instead of gross income because net income will give me more numbers that I can work with, the numbers that I'm not going to go beyond my payment, right? So I only use net income. So when they put my net income, my debt that I own, and also my down payment, they were able to pull out how much I can be eligible to get as a mortgage. So that's what they did. So other people can use like gross income because gross income will help them be approved for more mortgage or the higher range of that they are beyond it because they give gross income, but I give net income. So my net income, so you have to add all the income you get. So that will give you the clear picture of how much you qualify for a mortgage. For me, my net income, the minimum, the assured, without overtime, without all those things, is 3,320. That is after tax. So after tax, you get 3,320. And then for other people or other companies include other incomes like child tax benefit. So other companies, other mortgage companies, they will not mind that because they know this is also income that come to you every month. So if you have that, and then you can add it to your income. And then maybe if you're getting 300, and then you can represent 3,600 tax benefit. They can add it, right? And then it will boost your. So now let's go ahead into more detail on how to calculate your down payment. So this is the part that you have to be careful so you don't go over your limit. You don't go over something that you cannot pay later. So let's see. So before you go to down payment, you have to save money, right? So unless if you inherit money somewhere or maybe someone give you as a gift or family contribution, so you have to save some money. So your saving, you have to decide. So with a net income of 3,320, and maybe I have other issues that I have to take care of, and then how much do I decide to save so I can hit this goal of paying for down payment? So for me, I decided to do 10%, which is the least. So I did 10% fixed. So 10% of 3,320 10% of 3,320 give you 332. Give you 332. So this is what you have to save every month. So for example, if it's like in a year, it won't be that much. And even in 2 years, I think it will be only around 7,000. So it's not that really much. So you have to do something with it, right? So you can grow it. If your timeline is two years, so and then you are saving this much, can you grow it so you can reach your goal faster? And how do you really grow it? So this is our next step. So after you save, so what do? You have to find account that you will create so you can be able to invest. So now let's invest for down payment, investing for down payment. So you're saving now, you're taking it so you can go and grow it. And once you grow it, you can now have more money to give as down payment. So saving 332 account that you have to put it inside. For me, I used the registered retirement saving plan, and the reason is because I will be able to remove it later on and use it for down payment without me paying any taxes, right? And also, the growth on this money is not going to be taxed if you withdraw it with the other money. So that was the best account that I could use. And again, too, once you have contributed this much money, that amount that you contribute to that account can be deducted from your taxable income. So you will get more cash back from the government, and that cash you can really actually reinvest it into the account until you reach that time that you want to withdraw them for down payment. So that's the account that I was using. Yeah, so deposit 332 into that account and then find something that you can put it in so it can grow, because the money that is not invested and is not growing, it suffer inflation and then the value of that money decrease. So you have to put it into something so it can grow. Other account, or the best account that people use nowadays, is FHSA. FHSA is first home saving account. It was just introduced the other day, and it's the best because some people don't want to put back the money that they remove for down payment because they have other things that they are doing. So FHSA give you that opportunity of withdrawing the money without being asked to put it back. But RSP, you have to recontribute it back to your account and then maybe use it for retirement later. So FSHA is for people who want to start now and then use it for their investment if they want to build down payment for the first home. The next one will be, where do you now invest it? You have the account, you put the money inside, now you are investing it. So my strategy was I buy stock that pay dividend, and then I will hold them long term, given that time that I have set to close the account so I can buy the house. So buy stock for long term, I buy dividend stocks. So, and then for short term, I was also buying growth stock. Growth stocks are the stock that do not pay dividend, but they have high growth. So if they increase in value, and then I sell it. But this thing, you don't have to do it regularly, because what happen is the government will track it, and then think like you are avoiding taxes intentionally. So when you're investing, I don't have to be trading every day. Another one will be now down payment. How do you calculate minimum down payment? So how to calculate minimum down payment? The minimum in Canada is always 5% of the market value of the house, and then from 100,000 or maybe zero, there's no house for zero. maybe 50,000. So 50,000 to 500, you can apply 5%. But anything beyond 500,000, you have to be charged 10%, right? So let's explain and calculate how it is calculated. So for mine, I was ranging between 100 and 500. So I take 0.05 times 205, 205,000. So the amount of down payment that I had to pay was only 10,250. Other people that are buying beyond 500, they would have to pay more down payment, because part of the money above 500, they have to pay 10%. But me, I was just within this range. Down payment. So another ones, what about the minimum for down payment for a house that is 550,000 home? So how much do you pay? So the first 500 will be charged 5%. So if you do the calculation, you will pay 25,000 for the first 500. For the next one, it will be the down payment for 750, right? So first 500 we have already calculated for 5%. And then now we are going to calculate the more down payment that you have to pay because you are beyond 500. So that one will be charged 10%. And then this amount plus the other amount, you just add them up, and that is the amount of down payment that you have to pay to get your first home, right? 5%. Let's see. So 10% times 250. So the 250, you take 500 minus 750, 500,000 minus 750,000. So you get 250,000. That is the amount that you went beyond, that you do not qualify now for 5,000, but you qualify to apply 10%. So if you apply 10% there, you get 25,000. So now let's add it up. So when the down payment for 750,000 house will be, so I made a mistake here. So it's supposed to be 50,000. So it's 50,000 because it's 25 plus 25, so you get 50,000. So that is the amount of down payment that you have to collect. And both my down payment and this down payment, they do not include closing costs. So you have to finish with down payment and then also look at how much do you need for closing costs. So closing costs is not that much, but the down payment is a big deal because if you have to raise 50,000 for you to get a house that is 750, but also other factors also are to be considered. That is the end of the video, and if you like this video, please subscribe for more videos, and I will appreciate your business. Ale, kidumu saifa?